Hey, how you guys doing? My name is Chris Cyrus. I run several companies or are part of several different teams around business, around personal development. But one of the teams that I'm happy to be a part of is Courage 500. Now, Courage 500, we have a trading, platform, a trading team. This is the place where I go to learn and educate myself on trading, Forex trading. So I put on a couple of trades last night. Let's see how they've done. I've got them on my phone as a trading app. So the thing that I'm using is called MetaTrader 4. And I lined up some charts yesterday, and there's been some profits and some wins. But what I really want to show and share with you today is how I line up charts and how I go for my pips, and just give you some education. So I'll share screen now. Let's go to the login to desktop. This should be the desktop. Yeah. Let's go into trading view. All right. So the very first thing is continue with that. The very first thing you want to do is go to tradingview.com. So this is a free platform. It's called tradingview.com, where you can basically see what the market's doing, see what's happening in the market. You'll need another platform to actually do your trades, but this is where you see what's going on. So over to my right, you can see the currency pairs. So that's GBP AUD, which is the pound against the Australian dollar. Got GBP JPY, which is the pound against Japanese yen. What we've got over here, we've got the time scale. So what I generally do is I'll start with maybe a week time scale. And this is what it looks like over a week. This is what's been happening over the week. Down here is just an indicator, so you can ignore that for now. This is the main information here in the middle. If I make it a bit bigger, what you're basically looking at is green and red candles. We call these candles. The green candles are going up, which we call bullish. The red candles are going down, which we call bearish. And what we're looking for in the weekly chart, and you can see it goes, this is 2019 here. This is April, October of last year, and then we're into 2020, starting here, April and July. So this is now, these are weekly candles. So each of these candles is what happened over a week. So on this date, this was 4th of May, 2020, that whole week had a bearish candle, a downward, the trend was going down. The market, the cost of the pair, so the cost of pound against Australian dollar went down that week. Yeah, so that makes sense. But what we're looking for in the weekly chart is just the overall trend. So the overall trend from April the 6th down to now, which is July, has been downward. It's been a downward trend. And what we're looking for is we want to be able to trade with the trend. So I want to be buying when it's going up, selling when it's going down. However, if we have a longer look, what you can see here is that though it goes up and down, generally since 2016, it's overall been going up. So it'll go up, it'll go down, but it won't go as low as it went before. It'll go up, it went down. But this is higher than this. It goes up, it goes down. But this is higher than this. It goes up and it goes down. So you can see a trend line of it. When it comes down, it's what we call a higher low. So a higher high, higher high, higher high, higher high, higher high, higher high, and low and higher low. Sorry, higher lows. So when it goes down each time, it's low, but it's higher than the previous low, which is called a higher low. So as much as this has been a week-long, several months of going down, it's now hit the trend line of where it's actually going up. So what we can see from this is the potential of actually moving into an uptrend. So it's been a downtrend since April, but it's now hit a trend line. So we're looking either for it to pass this trend line and continue a downtrend, in which place I'll put a sell, or I'm looking for action at this line to tell me actually it's going back to the major trend, which is an uptrend, and going to start going up again. So that's weekly. You don't really trade on the weekly, or I don't trade on the weekly. I just have a look at what's going on in the market, understand what's going on in the market from the weekly. Then I'll move to daily. And again, we can see each of these candles is a day. So this is what's happened over the day. And most days have been downward trend since April. And what you can see down the bottom here is it's starting to have what we call a level of support. So support is where it hits a ground and it doesn't go below that ground. So it hit this ground, went back up, and instead of going further down, it stopped at that same level. So here would be what we call a support line. Yeah, so that's how you draw a support line. You go to over here, and there's several lines that you can choose from. I use the horizontal one to do a straight line, the trend line. The blue one I'm using is this one here at the top. So it's hit a support line, which is another indication that it's potentially ready to start going up. This is my blue trend line. Again, it's likely to go up. And what we see here, this is the daily chart, is it did break this support line, but not by very much, and it's gone back up above it. So I really am looking for opportunities to buy right now, as far as this market's concerned. I'm just deleting some of the other lines that I've done. I really am looking at to buy, and considering how far it's come down and what it's doing now, we can potentially draw a trend line on a daily chart that looks like this. If it stays going like it's going, something like that. But we'll have a little closer look. So this is the 4 hour. And we can clearly see it is now in an uptrend by the 4 hour. So it's going up and it's going down, but this is a higher low than this low. It's gone up and it's come down. This is a higher low. It's gone up, it's come down. This is a higher low. So this is an upward trend. So I'm looking to buy in this market. I'll go to a slightly smaller time frame, which is the hour. And again, we can see what we're looking at. Now, this line here is a ceiling of where it went to previously. So the last time it was going up was here, 20th of July, it went up, it hit the ceiling and come all the way down. So now it's coming back up. We have to be aware and respect this ceiling. As much as it's an uptrend, we have to be aware of what's happened previously and be aware of this ceiling. And what I would say to really validate this uptrend, as much as I can jump in now and take it up to this ceiling, is I'll probably be looking for it to break this ceiling, retest this ceiling, and keep going up before I really confirm that this is an uptrend. Let's have a look at how many, use this ruler to see how many pips this is. So it's 28 pips up until that next ceiling. So what I'm going to do is, 30 pips a day is good. What I'm going to do is I'm going to go for this trade up until that ceiling. So I'm going to put on a long position, and it looks like this. And this is basically what I'm going to be trading today. Now, what we're looking for, and the reason I'm using this tool, is we're also looking for, that's the profit that I'm going to go for, 28 pips. But I've also got to understand that it could reverse and go down, and I've got to manage my losses. So if I'm only going to go 28 pips up, I only want to go 28 pips down. So what I'm looking for is a ratio of 1 to 1, which is about here. So that means I can win as much as I can lose. Very often I'll be looking at a 2 to 1, or I'll be looking at a higher ratio, but the minimum is an even split. So I can lose as much as I can win. When we talk about 28 pips, as I showed you, we use the ruler to kind of count where we are to where we're going. And that number there, the 2 and 6, the first two numbers before the decimal point, is what we're looking for in terms of the pips. Now, pips is just a measurement of how far it is. How much money that is depends on how much you put per pip. So when you go into your MetaTrader 4 app, it asks you how much you want to put per pip, essentially. So it's got 0.00. If you've done 0.10, that would be £1 per pip. So if I've done 0.10 and this arrived at the top here, I would achieve £28. If it goes down here, I lose £28. If I done 0.20, it'd be £2 per pip. So 28 times 2 is 40, 56, 56. So I can win 56 or lose 56 or earn 56 or lose £56. I need to put this trade on, by the way, because it's moving up while I'm speaking. So I'm losing out on my 28 pips. So let me quickly put this trade on now. So I go to my MetaTrader 4 app and I go to the pair GBP AUD. GBP AUD, click on that, do new order. I'm not going to let you know the amount that I'm putting on, just because of the rules and regulations around share profits and whatnot. The line that I'm going to go to, so my take profit is where I've put, where I'm aiming for the market to go. So that is 1.80598, and my stop loss is as low as I want it to go before I say, okay, I've lost it, I've made a bad, trade here, is 1.80093. 1.80093, and I press buy because I want it to go in that direction. I'm buying it and it's done. So we can look a little bit later on and see whether this trade hits its take profit or if it goes down here at a loss. So we will come back later and look at that. Let's get it. Let's go. Hey guys, so we have some results. I'll quickly share my screen. So earlier today we was on GPB board AUD, which is British pound against the Australian dollar. I set my stop loss here at 1.79953 and my take profit here at 1.80594, and as you can see, it has gone from where it was around here at the time and hit my take profit mark, which would have been approximately, using the ruler, 30 pips. As I mentioned earlier, in terms of pips, it depends on how much you invest per pip. So 0.10 would be £1 per pip, 0.20 would be £2 per pip, 1.00 would be £10 per pip, 100.00 would be £100 per pip. So in terms of 30 pips, that could be £3, £30, £3,000, £300,000. It really does depend on what you have it in your account. We generally suggest around 1% of your account to invest in the market, to invest in any trade. So if you have £1,000, you're looking at £1 per pip would be a safe way to manage your account, which means if you do go minus and it is minus £30, it doesn't have a massive effect on your account. If you've only got £300, for example, and use £1 per pip, that £30 done 3-4 times, and you're starting to look like your account is diminishing and blowing, what we call blowing your account. So to protect the account, you look at a 1% per trade that you're investing in. Okay, so if you want to learn more, if you want to be able to do this yourself, be able to understand what the candles are, be able to understand how to use the ruler, how to create trend lines, you want to be able to make money in the market, then DM me today, and what I will do is I will send you the information of our meeting. Our meeting will invite you into our platform that teaches you how to do this for yourself. I look forward to working with you guys. Let's get it. Let's go.